All right, folks, welcome back to the channel. So Canadian real estate market is entering phase two. So in our phase one, we had the condo pre-construction and the condo market in general face an overwhelming situations over the past few years. But now we're entering real estate phase number two, which will impact detached homes. I did talk about this in many of my previous videos on the channel, exactly on this topic and how everything is pretty much linked, whether it's condos, detached homes, or any other type of properties, they seem to be linked together. So I have roughly around 10 points that I would like to talk to you about, and we can decipher it together. So stay tuned and let's get right into the video. All right, so let's talk about the condo that was phase one, and it did crack first. So oversupply, investors panic, and an early collapse. We have seen that early stages of the real estate collapse, and which obviously happened to be pre-construction, cancellations, like negative equity, mass for sale signs that we have seen, that these investors, they just literally wanted to exit the market as soon as possible because they could see, they could feel what was happening. So those were the first cracks, which I would like to call phase one collapse. Now moving forward in phase two, which already has begun. Actually, it began in 2022. It just takes a little bit of time and it takes a little bit of adjustment, right? Like, doesn't matter what happens today, it literally takes time for the market, the banks, the interest rates, the people, the mindset, the economy to kind of adjust. So sometimes it's adjust within 3 months, 6 months, 1 year, but it trickles down one way or another. So phase two begins. Detached homes finally feel the shock. Large mortgages, higher rates, bigger financial stress. The segment that never drops finally is dropping. And we have seen that over 2-3 decades in Canada. And it seemed like that Canadian real estate market was untouchable. It seemed like the blue chip that everyone seemed to be investing. However, the cracks are now visible. And what I can actually feel now is like, I think those cracks were always visible. But now it's hitting individuals' pockets. It's a discussion on the dinner table now, right? Because it is affecting you directly, right? So I think more and more we will see that some of these cracks are going to be overexposed now because they're going to be overcranked. And I remember talking about these same identical issues 2 years ago on the channel, and people were making fun of me. They're like, okay, this guy is only negative news and it's only doom and gloom. Yes, so be it. But some of these subscribers and viewers got the information 2 years ago. Yes, it was my view, my prediction, how everything will slide. But I happen to be right, not only partially, but for the most part, right? So detached owners held out longer, but not anymore. Savings depleted, renewals hitting, taxes rising, no more room to hide behind low low payments of 2020 and 2021. And this is a huge factor. So let's get into it. Now we have 2 million renewals happening in 2026. On top of that, let's not forget that the tax reassessment, the last one or the current one that we have standing, it was 2016. So from 2016 to 2026 is a decade. So it's 10 years, right? So within those 10 years, your tax bill Your annual property tax bill has been assessed from 2016 most of the time. So what does that mean? So taxes will explode. Cities, towns across Canada, in all the provinces need money, right? They need your taxes. So that will go up. So you mix the fact that you will have 2 million mortgage renewals, and even if it means minor, right? Few $100 here and there, few $100 here and there, right? But if you keep adding few $100 on top of few $100, you will get to a couple of $1,000s very easily. So that's the tipping point. And then the final ingredient, which I believe, and most are predicting, historical data, if we mix everything into one bundle, it's employment. As soon as employment reaches double digit, and it will happen before you know it, right? Because I remember making these videos when we were, at 3% unemployment rate. And then I mentioned that it could double very quickly. And people said, no, there's no chance. It's not possible. Well, it doubled, right? It can triple, right? Of course it can. Everything is possible. Everything is on the table laid out. All the options are possible nowadays, unfortunately. So the stability is gone, right? And with that, inventory flows from suburbs next. Yes, I talked about that. And the suburbs, a lot of things are changing. 2026, January hits. Everyone that had a job or still has a job, most likely will have to return to their offices, which is an added stress, right? Commute time, not being able to make it from home because they have purchased, in the suburbs, which at that time, when suburbs were hot or in demand, they were asking premium pricing. Today, that landscape looks completely different. So the asking price and the achievable price is completely two different worlds nowadays. So the people will most likely will have to commute, which will add stress. They cannot sell because the appraisals will not hit. They will lose money. So you see where this is going? So now it's hitting the suburb is literally the fuel that will add to this enormous economical fire, right? If we can call it, which bring us to investor-owned detached homes becoming a liability, Airbnb collapsing, long-term rentals negative cash flow, investors dumping units they once thought were safe, which is another point, right? In these suburbs, let me give you an example. Kitchener, Guelph, Waterloo, Niagara Falls, Hamilton, Windsor, Woodstock, if you go on the other side, Ajax, we have Campbellville to the north, Stouffville, like all these small Barrie, right, where people were investing thousands of dollars to buy these detached homes, convert them into student housing. All of that is falling apart. So they have two options. One, keep it as a student rental, which you're basically collapsing because the demand for students is not there, all right? So the second is like, okay, so fine, let's convert it to a traditional rental long-term, right? 1 year, 2 year, whatever, to find a nice, decent family. Guess what's gonna happen? They cannot fetch the same money, right? So at that point, they're underwater because the only reason why they went towards student housing is to cram more students, basically lease these rooms individually and gain more income that way. So it made sense. Now that's collapsing. I mentioned Airbnb, right, back in the day, right? Like very, very favorite subject when it comes to cottages, right? So I made an awesome video on that. However, that's falling apart because people are not in tune with that type of, I would say, entertainment anymore. Because borders are open, if they have money, they will fly to the Caribbean, etc. Right? So the entire landscape has changed, but that particular owner or landlord still has to deal with payments. So if they're dealing with negative cash flow, they somehow have to offset that. How are they going to offset that? So now you have investors, negative cash flow. You have pre-construction buyer, negative cash flow. If they can even rent it nowadays, right? Then mortgages go up. Taxes will be reassessed. Like day-to-day cost of life. Go to a gas station, go to a store, wherever you head, went up in price. Your insurance probably went up. Everything went up, right? If you have to commute, you have to consider more gas, right? That's commute time. Plus the car. Maybe you need another vehicle. You didn't think you needed, right, 2 years ago or 3 years ago because you were content working out of your basement office. Now the landscape changed. So everything adding one domino on top of another domino. And it's just a matter of time when things are going to completely collapse, which brings us to the next point. Confidence is breaking. Emotional shift. Detached homes were the untouchable asset. Now even wealthy families are stressed and downsizing. It is so true. I spoke to a person that just sold a property and they fetched like good money for it, in my opinion. However, in their head, they said like, look, I sold my property for $3.2 million. All right, so I don't feel sorry for the person, or nor should I. I mean, it's their decision. However, they said I lost $2 million. Okay, so how so? Well, I could have sold it for 5. All right, fine, no problem. So why didn't you keep it? So it was my question. Why didn't you keep it? If you thought that you lost $2 million, which technically on paper they did, now you sold it for 3.2, why aren't you sticking to your guns in your home for another year, 2, 3, 4, 5, 10, and gain the $5 million back, right? Because what is a better investment? Where else are you going to make $2 million, right? Cash, no tax, your property, etc., right? And he said, like, look, I don't think he's going to come back. And this gentleman is a lawyer. And he said, like, look, with all the respect, I don't think we can recover. On top of that, even if we could, I don't care. Because the taxes on that type of a property is over $20,000, right? So, like, even this gentleman is adding and subtracting his life. And he's like, I don't want to deal with that, right? So I don't care, right? And that property that has been bought, because I asked the same question, okay, you sold, but who bought, right? So many families got together and bought that property. And I asked, well, what did you ask? Like, he's like, well, apparently they said they want to be in a good school district. That's what he said. Many families or group of people got together and they're going to live in one property. I know it's not for everybody, but it's happening all around Toronto, GTA. All right, downsizing wave coming in 2026. Boomers overwhelmed by tax, utilities, cost of living. Selling detached, moving to condos and rentals. Yes, as I previously mentioned, this is exactly what's happening. So, but let's calculate something else that's actually very fascinating and interesting. So 2025 was not the glamorous year. 2024, not glamorous at all. So whoever sold, they were biting the bullet, or they, lost equity in their head or whatever, so they're out. But those ones, 2023, 2024, 2025, everybody is waiting for the big 2026 to make the move, sell the property, spring market is hot, let's go, right? So everybody is crunching statistics. I shouldn't sell now because from November to maybe February is the slowest market. And maybe from onwards, like March, April, May, this is where the potential of gaining more increases by numbers, by statistics. But they're forgetting that it will be an overflow, like it will be overcranked. So the listings might spike to that enormous number that it will not make sense at all. And believe me, all of those people, 2023, 2024, 2025, they cannot hold anymore. Most cannot anymore. They will show up in your MLS feed 100%, right? So now you're dealing with the boomers, you're dealing with the people that want to sell, you're dealing with the people that have to sell, you're dealing with the normal people that are just time to move on. So now everybody is showing up to the party, right? So it will be very, very, very challenging in my personal humble opinion in 2026. Buyers sitting out, no support at current prices. Pre-approvals shrinking, job insecurity growing, people refusing to buy, falling assets. And this is just it, right? Like, and I'm asking you, right? Like we're nearing towards the end of the video. If you are still around, thank you so much for watching. You can obviously subscribe and like the channel. It'll help the algorithm. However, how do you feel, right? Like if you have to buy and you don't have a choice, you will have to buy it. I get that, right? And this is what's currently happening in the market. But you will not wake up just like that and decide, you know what? Let me buy a pre-con. You know what? Let me buy a house. Let me just upgrade my house just like that. It's not going to happen unless you have to due to employment or you really have to move due to other logistical factors or maybe some personal, right? Okay, you'll do it. But other than that, you're not moving. Like nobody is pulling those stunts, let me call them stunts anymore, just like that, out of curiosity, right? So the final phase, price compression across all housing, condos dropping first, now detached normalizes downward, all segments eventually converge to the true affordability. Phase 3 will be forced sales mass repricing. And yes, in 2026, I think the reveal, the curtains will open, and behind these curtains, you will see a lot of people that are probably holding out on the information. Could be your neighbors, could be family members, right? From outside in is like, come on, like, you know what I mean? Everything looks good, like happy people, which is fine, right? But they could be in debt so much that you have no idea what they're doing behind the scene to stay afloat, right? So I think the phase 2, it already cracked. For me, it cracked a long time ago, right? But I think now we are in between phase 2 and phase 3. I think the phase 2 will see a mass upload of new listings, and then phase 3 that landlords and owners and people that want to exit will have no choice but to subscribe to phase 3 and just keep reducing until it becomes either attractive or affordable to somebody that they can buy it without thinking twice about it. So I hope you like this video and you gain something valuable out of it. Please like, share, and subscribe, and I'll see you in the next one.